Yeah, morning traders, and welcome to the new trading week ahead. If we have a look at the platform which we've been set, I guess the market's journey and the foresight that we've been sort of looking at has been muddied to an extent, certainly by what we've been seeing from the US CPI number, which we can touch on in a second. But I guess we've learned that the UK and Japan are in a technical recession. I think it sort of throws weight that they perhaps should be adopting the same model as what we've got in the US, where the NBER actually give the final say on when a recession's been happening. I think that's probably a much better model to look at, because I think a technical recession doesn't really serve anyone any great purpose. But I think the market sort of overlooked that to an extent. We've actually seen the Nikkei flirting with those all-time highs that we got back in December 1989. We've seen dollar yen move up into the high 150s. I think probably the biggest story in Japan is that we've seen the finance minister, Mr. Suzuki, and also the head of the currency trading, Mr. Kanda, looking at sort of pushing back against the yen weakness recently, and that's done had some effect of curbing dollar yen upside into sort of those one high 50s as we talked about there. But again, that just continues to be a very strong rates trade. Obviously, that US CPI number has really resonated, certainly on the super core number, which we saw at 0.85 of 1%. And obviously, the services numbers, although it was really driven by owner's equivalent rent, which I think a lot of people say is a bit of a nonsense number in the first place. But then you've got PPI, which has been strong as well. Now, that does suggest that when we get the core PCE number, which of course the Fed set policy to, which comes out on the 29th of February, we are expecting that to be, about 0.4 of 1% month on month, which, if we take that back a year ago, probably would have been a trigger for the Fed to raise rates. What it does do is when we get the February data series coming through, and certainly the CPI data, which comes out on the 12th of March, some way off, but certainly a date for your diary, I think the market's going to give that one a lot of focus, and I think we could see some big implied volatility around that one as well. Now, I think if we have a look at the way the dollar's traded last week, and bear in mind that we did also get a fairly weak retail sales number, so it was a bit of a toxic mix in that situation, higher inflation, weaker retails numbers. But we did see the US dollar grinding up 20 basis points in the Dixie. That's the 6 weeks in a row that we've been seeing gains coming through there. Bit of a mixed picture across the G10 and emerging market space. As you can see here, there's been a sort of a mixed picture coming through. Despite what we saw in the rates market, we did see it. We started the week with 113 basis points of cuts being priced into US rates curve. We finished the week with 90 basis points of cuts, about 3.5 rate cuts being priced in by the end of the year. That sort of had the effect of lifting two-year yields up about 16 basis points, which should have been probably more of a dollar positive. We did see dollar index trading to 105, and it sort of just pulled back a little bit, rolled over towards the back end of the week. And it probably should have been a more of a dollar positive, especially with the PPI numbers coming through. But I think the world has amassed a fairly punchy US dollar position. In fact, if we have a look at the way the euro's trading at the moment, we saw that failed break through the lows of 107.23, sort of push back up. And I think we can push back above last week's highs and above the 200-day moving average. I think we can probably push this week up into 108.65, where I'll be looking to to sell out of those positions going forward and maybe fade that move. If we have a look at US equity markets, we did see the S&P underperform a little bit. We saw that down about 40 basis points week on week. It did hold last week's lows though. 49.18 was the last week's lows, but also the 5-week moving average as well, which I think seems to need to hold. If we see a break of that to the downside, I expect to see volatility pick up. You've got the VIX trading about 14%. I'd expect that to sort of push into 16, 17% and imply a greater move than what we're seeing at the moment, about 2%. But this week, in terms of equity markets, in terms of those levels, I do expect a bit more chop to play through in the market. We are seeing ranges holding up pretty well. Last week we saw S&P futures trading at about 130-point range. This week on the micro side, we do hear from Home Depot, we hear from Walmart on the retail side, so they could be quite interesting themselves. And then on Wednesday after market, we're going to be hearing from Nvidia, obviously a mammoth stock. It's got a 5% weighting on the S&P. It's got a 5% weighting on the Nasdaq, 4% on the S&P. And the market's expecting about 11% move in the after hours. So that could be a very pronounced one, especially if that sort of moves into other AI names. And that's going to be a big event risk for everyone to look at going forward. We have seen energy outperform, and we've seen petrocurrencies outperform. We've seen crude pushing up into those 29th of January pivot highs, 79.15. If we get a break of that, I think we'd probably push into the channel resistance around 80.50. That could be a level we look to flip into. But we've got crude on the radar, petrocurrencies on the radar very much as well in that situation. Where we have seen also outperformances in the Chinese equity markets. They've sort of started off the year of the dragon on a bit of a flyer. You can see the CN50 looking pretty strong at the moment. We've seen that that pushing higher. And again, that's breaking out. And it looks like we could probably go into 12,000 in the short term. Obviously, a bit of national team buying playing through. But I also see small caps really outperforming. The CSI 500 was up about 10% last week. So obviously a big one to watch out for. And in China this week, we've got the prime rate decision tomorrow on Tuesday. That's the sort of the rate that households can get financing from commercial banks. And then later in the week on Friday, we're going to have new home sales. Now, that will matter, I think, because that has been falling consecutively month on month, really since May 2023. And last month, we saw that new home prices dropping 45 basis points, which is one of the biggest moves we've seen for a while. So we would obviously want to see that improve a little bit coming forward. So China really outperforming. We've seen that underperformance from US. And perhaps that's going to continue. We have to see what happens from those Nvidia results as well. We are seeing Australia very much front and centre. I think we got to a high last week of 76.81. Yeah, a smidgen away really from the all-time high that we got 77.03. Now this week we do hear from obviously a number of factors on the micro side. We've got Cochlear earnings. BHP, Woolworths, Rio, Qantas, Fortescue Metals, to name a three. So we'll see if those numbers can inspire and take us to all-time highs. We also do see wage price index coming through on Wednesday. Now that could be quite interesting, not just for the rates story, where we're sort of pricing in about a 57% chance of a hike in June, 63 in August, and then the cuts fully priced in for September. But I think that wage price index could be quite interesting midweek for Australia, not just for the rate story, but obviously for the Australian dollar and also for the equity story, something we're watching there as well. We are watching commodities as well. Copper's pushed into 380. Can we see a nice push up? That was up over 3% last week. We're seeing good gains in silver. That's had a nice move up from $22. It looks like I think it probably wants to push into 24.40, 24.50 perhaps, into those kind of regions. And on the downside in the ags, we're seeing good moves in wheat to the downside. Corn, that's been getting pretty badly beaten up, and cocoa as well. So some big moves and some short positions to potentially look at. Other than that, in terms of the data flow, we're looking at flash PMIs in Europe and the UK and also the US. I think there's going to be some big numbers there in terms of growth. And then we're going to be looking at the Fed minutes to an extent, although I think we're probably non-event. So a lot to look out for this week. Trade at Pepperstone.